Hello and welcome to another update video about Bitcoin. So far, we don't seem to be done with the correction yet. In the previous video, did highlight to you that I would find another drop into that sort of 29.5K region quite likely. And so far, we see that because why did I find it likely? Well, it has to do just simply by applying the Elliott Wave guidelines and the Fibonacci relationships and just Fibonacci extensions basically. Because what we could see is that of this high, which was printed on Friday at around 31K, to the move down, we could obviously, we take the measurement and then we go to the high of the B wave to give us a likely completion, or at least an area to watch out for a C wave. And we talked here about the 29.5K region. 29,560 was the 1-to-1 ratio, and then here the 38.2 retracement, typically an ideal target for a fourth wave. And this is a fourth wave we're watching out for here. We're looking at, at least at the moment we assume that. And that would be the ideal target here, the 38.2 retracement. Now, we did come down now into that region, and now we just need to be watching for a possible reaction. At the moment, the reaction isn't strong enough for me yet to confirm that we have bottomed. So at the moment, I wouldn't rule out a drop down to 29,130, which is the 50% retracement, but really below that would be difficult to uphold this particular scenario, okay? At the moment, again, I don't have the evidence that it's bottomed. What I want to see as a first instance, first very small indication that we have bottomed, would be a break above the 29,640 level. Okay, I mean, obviously you could assume we've bottomed now, and then it's very simple to just put a stop loss below the last low. Another low below that would obviously cause invalidation of that thesis that we've bottomed. But that's sort of how to play it, right? It's sort of good reward to risk from here. But of course, I can't rule out at this stage that we will make another low. Because the way you count it, I mean, there are different ways. That's the problem. I could count the wave B as a triangle here, or count the wave B here, which I currently prefer. So that off this 31K high, we came down in an A wave, put in place our B wave. Then we had a wave 1 in the C wave, a wave 2 in the C wave. And the way we came down here looks to me that all of this was a third wave. In the third wave, 1, 2, 3, 4, 5. Wave 3 done. And either we are still working on the fourth wave, maybe as a flat pattern, where the wave B can overshoot to the downside, or this was already wave 4 and we have put a wave 5 in place, or it's still ongoing. But I think it currently looks like we're sort of towards the end of this corrective structure. As I always say, it's very hard really to say where exactly you are if you look at these subwaves of such a correction. But I think ideally we are getting towards the end of it. And looking at this, what it tells us is that we have fulfilled, and that's why we do the micro count, we have fulfilled the minimum requirements. I'm not going to label it as complete yet. I want to keep options open, but we certainly have fulfilled minimum expectations, and that's when we need to start watching. Now, this fourth wave seems very shallow and short for this wave 2. That's why I would rather prefer to see an extended fourth wave. And in this fourth wave, and that would be a possible micro count, but then again, it gets unreliable because these counts move very quickly. This could have been an A wave, overshooting B wave to the downside, now a C wave. Just an idea, okay? But this is sort of where we are, and more important than trying to figure out the micro count is first of all to understand what's the, let's say, invalidation level. That's here for me at 29,130. Ideally, I want to avoid a sustained break below that level. If we get that level, what would be the next support? Well, it would be, one second. Okay. So there's one more problem I just spotted here. So first of all, next support would be the 28,560 level. That's here an area of support with all these. It's not exactly that price, okay? But you see it's this previous wave 1 high, and then we've got 28,160, the previous wave 2 low. But there's obviously more along the way. So if you look at this entire structure now, yeah, and you look at the length of the wave 1 here, you want to avoid really an overlap with wave 4. So that's sort of in that region, 29,130. Now, an overlap would not be too problematic because it could be, this could still have evolved as a diagonal structure. But getting an overlap with wave 1, and that's actually at 29,001, where are we? 29,190, yeah. So it's a bit higher than the 50% retracement actually. If you get that overlap, it would invalidate the idea that all of this is an impulse. It can still work out as a diagonal, so it would not necessarily be bearish, but would just cost the chart a little bit of reliability. But then the 50% retracement, which I normally consider as sort of the level below which a wave 4 ideally doesn't go, that's just below it. So I'm not going to change the support area. But yeah, ideally we don't go too much lower, okay, in this fourth wave. What else to highlight? But yeah, we've got these two support regions below, and below that I think we have to consider alternative wave counts. Would then need to probably lose this wave degree, go to the next higher degree pattern, and allow for a much deeper retracement. Would not necessarily be bearish, but would just mean a deeper retracement into a lower support region. Yeah, and how would that work out? I had a few questions about, could I talk about the bearish scenario again? Yes. So what we talked about before in terms of, okay, only yesterday I highlighted it, you know, consider for yourself if you want to take some profit here, because we moved off our trend reversal area around about 50%. So, you know, for some people it might be useful to take some profits. And here, yeah, this could now be, and depending on how we count it, but that all of this was a wave 1, yeah, and we come down in a wave 2. This would be the alternative scenario that I would basically use should we really get that sustained drop below 29,130 and then a follow through below this support region I highlighted as well. I will specify that a bit further if we really drop below 29,130, but then main support will be here in the low to mid 20k region. I can actually put that on the chart for you now, but I will take it out again until we really need it. We would then talk about the region between 22k and 25,300. This would be the next relevant major support level in a 1-2 setup. That would not be bearish. It would just be the 1-2 setup in the larger third wave. Alternatively, it's not 1-2, but A, B, with a C wave to the upside. And then this is the next area of support where the price could hold support. But ideally, it's pushing directly higher, but we just need to be cautious. I did explain that all these 1-2 setups, they don't give a lot of confidence for further upside, even though they are bullish. Yeah, but if you have too many of them, it just means the chart doesn't really get off the ground, and there's just a lot of bears still that are selling into the rallies. But again, at the moment, we're holding our orange support area. As long as we do that, expectations are for direct continuation to the upside. Just note that, of course, a deeper pullback with a rally afterwards is still on the table as a possibility. All right, that's my update about Bitcoin. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.